Hello traders. This video is a recording of our daily stream held earlier today at 8 a.m. London, where we usually cover all the major news flow, market developments, which provides a great way of our traders to catch up with everything they need to know for the trading session ahead. Also, from time to time, we discuss strategies and other trading related topics, as well as answer some questions or talking points raised in the group. In today's session, we unpacked the Fed decision and also highlighted some opportunities we are currently seeing in the Kiwi dollar, crude oil, Bitcoin, and Ethereum. So stick around if you want to see those, as well as a short announcement at the end. Good morning, good afternoon, Thursday, December 11th. We will digest the Fed meeting, and there's not too much to digest, but I want to cover some commentary from Anna Wong, which was quite insightful, in my opinion. Before we do that, quick look at the markets. Quite mixed. We're seeing a little bit of a pullback, perhaps a little bit of profit taking and rebalancing. We have rallied a lot on the expectation of Fed cuts, and I did think that we could find ourselves in a bit of a choppy environment. Didn't last night, in the heat of the moment, rallied hard, but Asia markets just on the back foot slightly. Stocks, as you can see there, the sector performances are all very strong. Materials, industrials, consumer discretionary, they've been lagging a little bit in prior sessions. If you remember, they've caught up. Brent lower, copper lower, gold lower, silver, platinum, palladium, the other ones are higher. This morning, the FX markets are a little mixed, but yen on the back foot predominantly. Aussie still down on the day, but paring back. Up ahead today, we have jobless claims, and that's it. Jobless claims. Get EIA, nat gas report. Quick look at the news flow and unpacking the Fed. Fed cuts for the third time in a row are expected. S&P best FOMC day since March as Powell praises the economy, and usually Powell has been the top quite a lot of the times. But yeah, best day. Treasuries gains as Fed cuts, and I think those a bit of a short squeeze as well that was fueled by a bit of covering on the long side. That led to Treasuries sliding, and we also had a bit of good data and yields higher. So the question is, where are yields going now? I think, as yields, I give them a lot of importance. They capture everything that's going on in macro, and FX is a macro asset. So yeah, we'll take a look at some charts. Tech stocks, waste of money, the hedges. Traders bet on gains. Oh, we have earnings today as well, don't we? We have AVGO, I believe. So we have that, I think, after the bell. Oracle last night, by the way, was weak. They missed on revenue, but other components, I think the data center revenue or the infrastructure revenue was okay. But it did trade lower after hours. Cisco shares finally top .com record after 25 years. Just a stat. SK Hynix, very, very high flyer here in Korea, draws ban on margin trading. They've had to suspend trading a couple of times, and we're very averse to risk here, being quite a conservative country, worried about leverages. And household leverage is quite high here as well. Netflix, that stuff continues. They're looking to borrow heavily again. Bit of a bidding war with Paramount, with some big players coming in from the Abu Dhabi side and some sovereign funds. There's chatter of a few players in there. It's a bit of a bidding war. Netflix really wants it, and there's a bit of the dark arts being played there by trying to get them to pay up a premium for those who have an interest in Warner Brothers. Fed brings Goldilocks outcome for Asian markets. Yeah, could do. It was a rather Goldilocks type of projection, as we'll dive into. Silent descents reveals growing Fed resistance to Powell's cuts. I think that's somewhat expected anyway. Gold rallied pretty hard after it corrected quite a bit this morning. It went up into the 30s, if I'm not mistaken. Sorry, the 40s this morning, and then it just completely flopped over. But it went into the 30s last night on Powell, and then kind of rallied a little bit more after the Globex open, and we went as far down as 4205-ish, and I got long there at 4206. Just thought that was a gift given the price action, the strong impulse of price action to the upside. No bias, just the technicals, you know. Felt like a gift, and I had to get long, despite whatever view I had. I don't. It didn't really play a part at all. It was purely technical. Copper goes to a record high. Wall Street sees modest oil price decline next year on surplus. Yeah, I mean Javier Blas, the Bloomberg Commodities Energy correspondent, has been talking about the forward curve, how it's just flat, and he thought that was, possibly some sort of, it kind of shapes up to be some sort of tactically bullish type of scenario. I think that's kind of touching on that point a little bit. Dollar, worst day since September after Fed cuts rates. Okay, U.S. employment costs rise at the slowest pace since mid 2021. And the Fed really likes this measure. And yeah, wage growth slowing down. From what I've seen in my own analysis, is that it's still running at around 4%. So, not sure. I mean, I'm still, in the back of my mind, I'm playing with this idea. Still too early to act upon it. But when I think about the markets and the economy and things like that, the macro going forward, I do see a scenario where the labor market becomes tighter just because, the supply side, if just assuming that stays constant, as I've talked about before, when that demand picks up, that labor market supply is going to be taken up and it just gets incrementally tighter. And what does that mean for wages? Wages are a function of labor market supply and demand, right? Demand curve shifts to the right, that pushes the equilibrium wage price up, that kind of thing. Yeah, simple stuff, right? So I'm kind of thinking of that kind of scenario with regards to wage growth and employment costs. Elsewhere, Australian job gains hit multi-year low after a rare November drop. So we saw the Aussie get hit a little bit. It's paring back as risk is also kind of finding a bit of a rebound as well. BOJ make hike interest rates 4 times by 2027. I think that's slightly a touch more than priced. I'm not sure. Should be around 3 or 4 though. I'll have to check. Bond auction seeing strong demand. Seeing it again, pointing to the idea that it's at levels that investors are feeling comfortable getting into JGBs as well as being comfortable with some of the fiscal risks. Chinese yuan, probably way undervalued on trade weighted basis. China's bond yields may drop to record low in 2026. And yeah, I think China's bond yields could drop further because of they're no longer a hyper sort of growth economy as time goes on, and they're seeing a little bit of deflation, some weak macro there. Tax rate deepens London's housing market downturn. So yeah, this London's housing market downturn has kind of lingered. Been reports of slowing of activity for a while, and just only rents going up. But so yeah, we'll have to see how that story evolves. Slow moving story, it seems. A bit like Canada. Canada. I was talking with Angus just yesterday about the housing market there, and we've looked into it, did some analysis. We're seeing that delinquency rates are slowly starting to creep up in some areas. So we'll be monitoring that. If that starts to widen, then obviously that's bad for consumer spending, everything centered around housing, right? If households' financial position is weaker, then the economy weakens. It's just how it goes, right? So interesting developments. I think housing market should be closely watched in some economies where there are some negative outlooks. Mexico, 50% tariffs on China and other nations following Trump's footsteps. Been hearing about the steel tariffs and things like that. And some Trump news. Cambodia and Thailand, it's kicking off again. Both sides are pointing fingers. You started it. No, you started it. Don't know. Apparently, Trump will fix it just with a call. Uh, love his confidence. U.S. to start accepting gold card visa. Yeah, we heard Trump talk about this. And yeah, other stuff. Not too much more to say about that. So let's get to the crux of it. FOMC policy statement. Nothing we didn't really expect, except that maybe we may have expected 4 or 5 dissents. Something like 8-4, 7-5. But it was a bigger majority than probably what most of us were expecting. And that's kind of why people are probably saying that it wasn't as hawkish as expected, because just not as many dissents. Goolsby, yeah, well, it was a bit of a surprise one for me, but he did express a bit of caution. And then the other one being the reserve management purchases to ensure that the short-term funding markets are not experiencing any stress. So just a precautionary measure, and as Powell stressed, it is not tied to monetary policy. It's just something to ensure the system doesn't break. I did say yesterday that it could be perceived as bullish. People are already talking about this being QE, etc., on Twitter again. Annoying as it is, as I said yesterday, the opposite case can be made. If you don't do these and you see a bit of stress in short-term funding markets, that would be bearish. People get antsy about the spillover effects. So, the reverse of that, yeah, sure, why not slightly bullish? Or it's an insurance measure, right? So the SEP, no change. The dots still show a wide divergence of views, so no change there really. Unemployment still the same, no change to the September projections. Inflation seems to be a touch lower, and growth seems to be stronger, while unemployment is unchanged. So essentially, a stronger Goldilocks type of projection than September. There was more concerns about the labor market before as well, which could weigh on growth, but that seems to have reduced as well. So that labor market growth, they're believing that it's doing the job, right? That's kind of what it's saying, as well as upside risk to inflation being lesser, with inflation being revised down a touch. Probably because the latest data is actually not showing a strong sense of reacceleration at the pace that would get you particularly concerned. So I think that's why we're getting this more Goldilocks-ish type of projection. And then the Powell pressure, just to highlight on a few things. Expectation is for a pickup in growth. Spending has been resilient. AI data center investments has been strong, and fiscal policy will be supportive. Implication of that projection is higher productivity, and this was a response to the question of they're seeing stronger growth, unemployment staying flat, but wouldn't inflation risk be higher as a result of stronger growth and flat unemployment, given where we are now? And he's saying higher productivity, basically. Some data comments, no need to really get into that. Some comments about the dual mandate. Everyone still agrees that inflation is too high. All agree labor market has softened and there are further risks. The effects of rate cuts so far only beginning to be coming in. Made progress this year in non-tariff related inflation. And yeah, got asked a silly question about whether, it's about a hike now, whether that's on the table. Um, and he had to reiterate that, no one's seeing that at all. Shut up. Don't expect a sharper downturn in employment with rates in plausible range of neutral. Now, this I thought sounded a little bit hawkish because it's kind of implying that they're closer to neutral, right? And the downturn in employment is not going to persist now, on that assumption. So, slightly hawkish. Market did see a little bit of a hawkish reaction. I traded off it, got out as quickly as I got in because the markets weren't dealing with it, just completely shot the other way. Markets were moving way too fast, and it just spooked me. But yeah, it's obviously speaks to their positive outlook. And then this article from Bloomberg, which went through the transcript of Anna Wong's interview, and a lot of insightful comments. So I pasted it over and highlighted some main points. It's pretty good. So we'll go through this. The main takeaway being that Powell really believed the economy needed another cut. We knew it was very divided. More than half of them thought that holding rates constant was the wiser course of action. And we've been hearing that in the comments, right? And that's why we've seen like the narrative shift towards a hawkish direction over the past month. We're seeing that in the dot plot as well. Based on that, knowing that the majority basically preferred to hold rates, or, I didn't think the majority, but she's saying that, the majority did. The person that really changed this course of action or push for this 25 basis point was Powell. In terms of monetary policy transmission, essentially that the effects should start to impact the economy in a positive way. What the Fed signals for the path of rate cuts next year will decide on whether, easy financial conditions will add even more to the economy. At each point of these 25 basis point cut, the Fed thought, okay, I'm just going to do one more and we'll wait a bit. But what happened was the incoming data was telling them to do more. Things at 75 basis points to 100 basis points, there would be that much room. Fed may return to the pattern that we've been seeing in the last two meetings, that they would only do one or two more cuts. They may feel the need to do more as the data comes in. So we'll have to see. I mean, the data is starting to improve incrementally, and definitely the leading data is to a large extent, as well as prices coming down as well. So that should be good for activity. And then very, very insightful comments on Kevin Hassett. She was asked the question. I'll read it out actually. Anna, Hassett personally. You both worked on the Council of Economic Advisors during the first Trump term. You also spoke with him last month at the Bloomberg Insights and Innovation Summit in Washington, D.C. So what should we know about Hassett's qualifications for the job? What do you think Trump sees in him? And this is what she said. Everybody knows him through his TV interviews, where he's basically selling the administration's policies, getting people to believe in them. But the other side is that he's actually very sensitive to the data and he's very good at tackling questions. He's well-rounded on all sorts of aspects of the economy. It gives him an advantage on how to push the Fed staff into incorporating many things that typically they do not incorporate. For example, deregulation. Kevin has a strong view of where that will enter and how the staff should incorporate those. Anna believes that the Fed staff only does 1/4 of what Kevin Hassett believes in terms of correctly estimating the impacts of fiscal policies, the One Big Beautiful Bill, the impact of tax cuts and impact on growth and things like that. So she believes that Kevin Hassett really does have a strong handle on that and will steer the Fed better as a result. And some comments about how he's been behaving. He's been moving towards a more Fed chairman-like way of talking about things in the last week or so, and that he's showing that he's slowly transitioning himself to be more like a Fed chairman. Don't think it was announced yet, though. And then on the issue of Fed independence, if you've read and listened to Kevin Hassett and Steve Moran, strong believer of Fed independence, they've supported it, they cited academic research on it. But what differs in their view of Fed independence is that the Fed also needs to have accountability. From their perspective, they think that the Fed has really dropped the ball on inflation in the last 4 years. In terms of risk for true Fed independence destruction, I would be worried if I start seeing flimsy reasons for removing existing Fed presidents. Case in point, Lisa Cook. That's they're trying everything, right, to kind of engineer getting the people that they want in the Fed. So that's pretty much it. I think it's very insightful from Anna Wong. If you want to go ahead and read it, again, I've posted that on Twitter, just saying that it was pretty insightful. Dive in a few charts. SPX. Make sure I have the. So recovered. That whole bearish looking thing, right? I mean, technically, I was saying yesterday, this is a chart that you probably want to lean on the short side of risk, but anything can happen on a Fed day. And, you know, that certainly was the case yesterday. And very, very nice, strong rally. Just this was all J-Pow. And we kind of topped out at about 1.25 SD, whatever was priced in. And obviously, vol markets were pricing in more volatility. We can see an expansion in the bands, pricing in more volatility because of Fed Day, obviously. And yeah. Elsewhere, look at gold. That 4245 was key. 425 and 2025 was key in previous sessions, which was around this sort of area here. And we're right below it. So if we do kind of start to recover back, then I think we can start challenging the highs again. Obviously, a lot will depend on yields, so we'll take a quick look at that. It's retraced the whole breakout. And now, technically speaking, where do we go on from here? We are baked in for 2 more cuts. And if the narrative shifts towards that being 3, then we should see the 2-year drop even further. What would that do to the long end? We should see the long end sort of be relatively flat. I think the yields is not likely to go down from here, just because there's still a risk. Even though the talk has been about the Fed being done after this, potentially, after Anna Wong's insights and what the how the the Fed went yesterday. It seems like they've done a good job in terms of protecting growth, and 10-year being a function of that uh, probably means that we don't see this slide. So what does that mean for things like dollar yen? Probably means that it stays reasonably supported, right? I mean, we had a big flop over day, a Maribozu type of candle where you have an equally strong candle, so you end up with like a 2-day sort of reversal, and we've breakout high, we tagged that, and we rebounded. So dollar yen, are we going to go lower just because of yesterday? No, I don't think so. Uh, I think the path of least resistance for dollar yen is up because U.S. growth is still strong, and I think there are reasons for these upside risks to inflation and things like that to persist because of growth improving, and things like that. So, dollar yen, I still think the risk is up, and it's still very much a buy on dips, as it was this morning, paired back. But yeah, I think it will be much slower from here, probably though. And then what does it mean for things like cross yen? Still very much a buy on dips, strong uptrend. I don't see that changing anytime soon. Go over to the yen here. So we also saw that traders, that headline, traders are expecting, most of the rate cuts are now done, and it's starting to shift towards the idea of hikes. This is the yen index, and big support here, if anything, going back to last November. But the yen, it's hard to try to trade for the trend changes. It's always easier to go with the trend, as we talked about. So yeah, cross yen, I still think it's still a buy on dips. You buy it high, you sell it even higher. Kiwi yen, I got in long last night as scalp on the Fed meeting, and yeah, caught a little bit, but yeah, I still like these. Odd yen, Kiwi yen, And then we'll look at a few crosses. In fact, Aussie New Zealand first. So the jobs report was weaker, and given that there was a lot of hawkish expectation and the narrative was shifting to hikes, we're seeing that pair back. Look at the Aussie New Zealand 2-year spread, and we're seeing that follow lower as well. And what's the risk here? I think the risk is that slowly um, this spread keeps coming in lower. I don't expect the RBA sort of side to change a whole lot, but I do see scope for the Kiwi side to change a lot in a positive direction, in a hawkish direction, right? We're seeing some early signs of recovery. So Aussie New Zealand, I still think is the risk is to the downside. Technicals look good as well for more continuation to the downside, seeing a little bit of slightly ascending channel. The fact that it's not as uniform doesn't make it as strong for me. I do like those very uniform type of consolidation moves before you finally see that break, um, as um, as the buyers no longer are willing to pay a higher price. Yeah, I do like this, and so that means that Kiwi yen, Kiwi dollar are the favorite expressions over odd yen, Aussie dollar, for my opinion. And then we're seeing a little bit of Canadian weakness, I suppose. And I think New Zealand CAD could be a decent bet. Now we're seeing this over and under type of pattern, which is usually a sign of the trend changing with that lower low and lower high so far. But I do like this idea from a macro perspective, with the dollar not making too much headway and the dollar regime kind of heading more into a Goldilocks type of scenario. And that means that you don't get that rates volatility and the surge in the dollar, most likely to go sideways. Maybe let's just assume that space case dollar goes sort of sideways a little bit against the euro. If we assume that dollar is somewhat neutral, then and CAD to sort of suffer a little bit more because of their fundamentals turning weaker again. I think New Zealand CAD could be a good play. And might as well look at dollar CAD. Dollar CAD, very, very strong level at 1.38. Can it find a little bit of support? It might be a little bit of boring price action. But if there are reasons to find upside risks to the dollar, dollar CAD would probably be my natural go-to, given that the backdrop for risk is generally sound. It's, there's nothing troubling the broad risk spectrum. We might see some down days, but it won't be too much more than that. So I think dollar CAD would probably be one of my go-to expressions if there is reasons to be bullish on the dollar and dollar yen. So dollar CAD, I do rather like still, to keep it back in my mind. What else is there to look at? Mag 7. Still not looking too convincing yet, even after yesterday. Um, Still got that little bit of a exhaustion type of look about it. Made a lower low, still a lower high. Yeah. Not sure. Maybe it suffers and goes sideways as a result of a bit more broadening, given that, the relative value is very, very strong in these names compared to others. And we are still somewhat in a bull market, and there's no reason to think that that's going to end. So, yeah, interesting look here with the Mag 7. Gold, we looked at oil. Now, back to the lows. Are we, now that the Fed thing's over, um, and I wasn't interested in yesterday. Very, very good levels. We got even better levels again. In fact, we're right back to where we were yesterday. I think. Oh, it was here, but yeah, flopped over a little bit more. But yeah, very, very good levels. So I would probably be interested in getting into this now. Now that the Fed event has passed, uh, and the risks to growth are better, uh, and there's still a fairly strong sort of easing bias. Then Obviously not a hiking bias at all yet. Potential for more than the two cuts priced in by the market right now. Yeah, I think there's no reason to really expect oil to give out. So do like it, do like the risk reward on a short term basis. I think you have to be kind of nimble until, you have some reasons to be convinced of more trend. But I would expect, these range lows to be good trades on a short-term basis. So oil definitely got my attention again, especially now that we're back down here. Very, very strong levels. We've auctioned the heck out of these levels before, and we eventually broke higher a few times. So great levels. And also going back to this area here as well, below the 60, right? So we're currently at 57.85, that faint line here, and we can see that consolidation just below that little thick area here, and some dips below, some shouldering, and yeah, good levels. And the VIX, what relatively low still, 16.7 is still very, very normal. You know, you head below 60 and then you know that the market is just smooth sailing, grinding higher. BTC, I don't think long materialized. Yeah, I'm kind of put off by, in all honesty. I mean, uh, I don't see, I don't see this ripping either. Uh, technically looks very good, right? On the short time frame, we have this long indecision bar. I think it's the next few sessions and maybe a week or two would probably be key. It's all about reclaiming this level here, isn't it? So, you look on the weekly, that red line here, that 91 500, I think that's a key bull bear line, right? And you start to go above and there's a bit of a risk of supply being found. And we are seeing a little bit of that. But, as long as we're above there, I think you can be more positive about it. If we're not so much. But, also decent levels here. Looking at the daily bars, it's not looking great, but levels wise, it's looking fairly decent here. A lot of clustering in those consolidations around this level here. Clustering here, here, here. Lows of this whole area here. Obviously, this one we talked about here, here, here. Right. So it's a good area. So that 90K seems to be a decent, swing trade, I guess. If you give it a little bit of room, maybe these lows are good enough to put stops in. Quickly do the fibs. Do it roughly for now. Yeah, we're just below the 61.8 area. So maybe a solid plan would be to see a breakout, for example. Get the bigger candles up. So this level here is so this level here is that 61.8 where we've seen resistance here, and we're seeing potentially this sort of pattern sort of play out, this sort of consolidation. So uh, I do like to buy. I do like to buy bottoms of these types of consolidate. I kind of try to visualize it so that I can get some damn good entries. Might take a few tries, might chop you up a few times, but in the end, a lot of the times it's worth it. And then when you get that one that pays off, and then you get this thing, and you're liking that it breaks above, and then try to add it to it. Sometimes it doesn't work out, and then you come away scratch based on the average. But when you do, you can sometimes get those huge winners. So, based on what I'm seeing here, the pattern here, and seeing how it could evolve, I do want to see more, but do see potential for a big trade there, based on these levels here, right? So the low, in fact, has been right here, right? This level here, very, very solid. And we've just done that little thing. So interesting that we took the love, compressed, and now we're, you know, looks like it's coiling up. I really like it actually. The more I look at it, and the more I look at the levels and what it's doing around those levels, we saw the 61.8 level being there as well. So that's a good reference point if we break above that now. And yeah, it looks good. What's the Bitcoin stuff? MSTR. What's the other Bitcoin stuff in stocks, guys? It's okay as well. MSTR looks quite decent. We had the huge impulsive move, and then we have this level here, right? So it looks quite promising too there. What's the ETH one? What's Tom Lee's one? Um, what is that? Bitminer? What's what's Bitminer by the way? BMR? B. What's Tom Lee's thing? Oh, anybody remember? BMNR. I knew somebody would know, especially you. Okay, BMNR. Holy shit! I didn't expect to see that. What the heck? Crypto's getting hammered, and people just love Tom Lee, don't they? It seems to me that Tom Lee's really trying to be the strategist of the people, the retail. You could see it in his posts as well. He's interacting with people, tagging him, and he's loving it. Good old Tom Lee. He's the eternal optimist, and I think the retail loves him just because of that. And he just sounds like a he just kind of sounds like a sweet guy, like how adorable kind of dude. But yeah, I'm surprised that it's done quite well actually in this period. So ETH then, yeah, kind of similar trend except much smoother. ETH, hmm, 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 doesn't look as compelling as BTC does. I think 3140 would do, which is not too far, not too far at all. So yeah, maybe if you get 3140, I'd probably get interested in this, but it'd probably be a smaller, kind of more swing trading type of position than anything. Uh, but yeah, it looks good. Looks okay. Looks okay. Not as compelling as how the BTC action looks, but does look pretty good. Does look higher highs and higher lows. And, does look like it kind of wants to take off. BTC, we're just seeing a little bit more compressed price action, like it's coiling up some energy. So yeah, we'll have to see how that goes. But I'm starting to like the look of this on the 5 minute time frame, you know, on the low time frames. So all right, fact. Quick look at the macro regimes. Okay, we're seeing a bull steepening. So that's clearly a dovish reaction to Powell. So that's going to be good for risk. Right. So still looks good, and not so good for the dollar, obviously. Um, Expectations are turning in a dovish direction after going into a hawkish direction, so it should be pretty good. Uh, okay, yeah, different tab. So yeah, the green bull steepening, not great for dollar. Good for cyclical currencies. Um, Not so much CAD, but don't like the CAD as much. But Kiwi, odd. Euro as well, put that in there. Maybe pound as well, given that it's kind of being a peso again, reacting like a high beta currency. Good for risk assets, not so great for the dollar. Good for S&P. Should be good for BTC as well. In fact, let's just put a fresh one on. Macro regimes. And what set do we have? We have 1 month. So we can see that in periods of green with BTC, it's found a bounce. And we're seeing that on the shorter time frame, especially what's happening, from on a 2-day rolling basis, all of those bars are green, right? And just the one before here. So yeah, it looks okay. We did see some bear steepening recently as well, bear flattening, and it shows that expectations are turning more hawkish, and so you see the front end rates rise faster than the long end. And you know, we saw BTC kind of not trade as well. If we blow it up a little bit, right? Kind of choppy. But when we did see the greens, we did start to find a bounce, and maybe we'll start to find a bounce again. So yeah, that's kind of the general gist. We'll wrap it up there. Speak to you guys in the chat. Thanks for tuning in. I hope you enjoyed that and got a good preview of what goes on in our daily streams. We will be rebranding and changing things up a little bit for the new year. A sneak preview of what you see here. If you've enjoyed this recording of the stream and have become interested in what goes on in the group, drop a comment below saying interested, or shoot me a message on X, and we'll invite you in for a visit until the end of the year. Thanks for watching, and good luck trading.